Hello, traders. It's here. July has finally arrived, bringing with it great anticipation for bull traders. Will the price action align with our expectations for this month? Well, it's on this note. I welcome you to another promising session focused on my price action based technical analysis on the US oil commodity. I have conducted a comprehensive analysis of the current market structure to uncover potential trading opportunities that we can take advantage of. In this video, I will be sharing with you my findings utilizing simple setups that will effectively guide us through the market structure. As you all know by now, our analysis will rely on the power of trend lines, key levels, and of course, chart patterns, enabling us to gain valuable insight into the historical price movement of the US oil. Before delving into the details, let's take a moment to reflect on the key moment from the previous week. We experienced success actually, securing approximately over 200 pips in profit across the both buy and sell positions we took advantage of. So, without further ado, let's us embark on this journey together. So, talking about last week's trading session, the first thing we observed at the beginning of the week was this simple consolidation phase between the $70 level and the $69 area, where we were looking out for either a breakout of the resistance line or the breakdown of the support line for a trading opportunity. So, with our orders placed at both ends, we had our buy position triggered initially at the beginning of the week, and in fact we were taken out of that one, so we had the loss, had the first position we took advantage of. Then subsequently we begin to identify new situations here, where we identified an ascending trend line which we said we were going to be using to guide our trading activity. And we also said here during our live session on YouTube that we shall be waiting for the breakdown of this trend line and the $69.50 level to join a bearish move. And in fact, the first half of last week's trading session was more of selling the US oil commodity. And in fact, we were able to maximize the potential of that move by adding more positions at the breakdown of the $69 level. And it was not until it got into the $68.20 level we begin to see some buy pressure resume again. And we were thinking at this point that it might likely turn out to be a retracement of that impulsive move. And as we have projected, it was the case. Price action went on to break down the $68.20 level as we rode the move all the way into that demand zone around the $67.50 area. We saw some little choppy situation go on, and it was at this point we were thinking that price could climb to the upside. And just as expected, we saw the breakout of the $68.20 level during the second half of the week as we closed last week's trading session on a bullish note. If you do want to have a review of this commentary for educational purposes, I already have the link to the description in the description box of this current video. And if you are watching this from my YouTube channel, you will be seeing the link at the top right hand side of your screen. So, with that being said, here let's dive right into the business for today. And what I did here on the US All Sport is to do a clinical top-down analysis. So I went to as far as the daily time frame to see how price action is looking like from that perspective. And on the daily time frame here, this was what I was able to see. It's just a simple market structure here. In fact, we have a very strong demand zone around that $65 area where you would notice how sellers have been struggling around this level to find new lows since the beginning of the month of March. So, despite the fact that we have been seeing lower highs since the month of March, you will see that price is yet to break down that demand zone, giving us a clue that buyers are likely very strong around that area. And there is a likelihood that this demand zone here could be a platform for potential uptrend situation in this particular market. So, from the information we have gathered here on the daily time frame, I went further to scale down into the 4 hours time frame where I later found out another setup that we are going to be using to guide trading activity for this week. And one of the important levels are on the 4 hours time frame is that key level at the $70 mark, a very strong psychological area where we saw price break out of that structure on the last trading day of last week. And in fact, prior to the last week's trading session, we have seen out that same level as being a major determinant of price action in this current market structure. So, as a result of this one, I'm going to be using the $70 level as a guide for my trading activity this week. And what this simply means is that as long as price action remains above the $70 area, I will be looking out for buying opportunities in this market. And unless we have a breakdown of the $70 level continued by selling pressure, will only be the time I will be looking out for selling opportunity. So, in order to make things a little bit more easier for me this week, I went further down to the 1 hour time frame, where in fact you will see a simple, very simple setup that we are going to be using for this week. Now, on the 1 hour time frame, I was able to come up with this setup after trying to understand what has been going on in this market in the last 1 week in anticipation of this new month that we just got into tomorrow. And one thing I was able to identify here is a simple ascending channel after connecting the series of higher highs, as you can see, and the series of higher lows here. So we have a beautiful ascending trend line to work with. Now, one important thing about this ascending trend line is the fact that you will see price has been trading within the upper half of this ascending channel to emphasize the level of buying strength in this particular market. So as long as price remains above that area, I want to continue to look out for buying opportunity here. So going into the new week right now, let me zoom into the structure. I have the $70.50 level where I want to see how the market will be reacting to the structure to determine what my next line of action will be. In fact, if I see a breakdown of the $70.50 level, price retest the structure, I'm still looking at the bus stop at the $70 area, which has a tendency of pushing price to the upside. But if we do have a breakdown of the $70 level, then we would have no other choice than to start considering selling the US all spot. And if it goes on to break down the support line of that ascending channel, then that will be good for more opportunities to sell. But I'm of the strong opinion that price action is likely going to be going to the upside. So we shall feel comfortable buying if price action remains above the $70 level. And if it goes on to further break out of the 71, then it will be a good opportunity to maximize the potential of this bullish move. Trust me, I'm going to be with you in the comment section on Monday morning after monitoring how participants in the market will be reacting to this current structure to determine what our next line of action will be. I do hope this video has been of immense help in making your independent decision on the US oil commodity. In fact, if you found the content very helpful and useful in making your trading decisions for the week, I will greatly appreciate your support by giving this video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.